Then here is the statement that I was referring to earlier, which is required, which is reconciling the total fund balance from all the governmental funds to the net assets of governmental activities that is found um, on the government-wide financial statements, the government-wide balance sheet, if you will. And so it's going to show you these long-term liabilities that are not included on the governmental fund sheet, as well as these items of deferred revenue and capital assets that are, again, long-term in nature. At least the capital assets are long-term in nature, so of course they're not included on the governmental fund statement. Here is your statement of revenues, expenditures, and changes in fund balances for your governmental funds. Again, you've got the same column headings up above. You've got your debt service fund, you've got your general fund, your debt reserve fund, your debt service fund, capital improvement, something called the Birmingham Fund, public improvement. And you've got, of course, your most of your activity on your expenditures and your revenues is in your general fund. But then you've got your various fund balances down at the bottom, beginning and ending with the net change in fund balance added to those. And you've got some transfers in and out, and you'll notice that those are hitting the debt service fund. So these transfers in and out going to other funds like the debt reserve fund, you'll see transferred out to the debt service fund to pay the bills, to pay the debt service. But most of these should add up to where they are netted out, because these are simply transfers between funds. And here is, again, another reconciling statement where you're reconciling the change in fund balances on the governmental funds statement. The governmental funds statement of revenues, expenditures, changes in fund balance with the change increase in net assets of governmental activities. And you can see all types of various types of things that aren't included on the governmental fund statements, like amortization. Remember, those aren't included in governmental funds. Those type of expenses that for-profit businesses as well as the government-wide statements have. Depreciation, things like this. You've got capital outlays, which are expenditures in the governmental funds that you capitalize in the government-wide funds. And this is another required statement. Okay, this one may be familiar to you, even though I don't think I required it, but it was one of the items in the Smithville application from the Module 3, I think, where if I had let you guys just do exactly what the instructions said in Smithville, you would have had to have prepared a budget versus actual statement, and this is what it looks like. You can see that you've got an original budget as well as a final budget that includes any amendments. And if we just glance at it here, it looks like the only amendments that they made were on the expenditure side, and it was increasing public safety, general government, cultural and recreational expenses, as well as debt service. So they, the expenditure side, they obviously had to amend the budget, and then you've got your actual amounts with your variance over here, your variance column. All right, this is a statement of net assets for proprietary funds, and again, Birmingham only has one, the Emergency Management Communication District. And you can see here it's only focused on the well, I'm sorry, it's a proprietary fund. It does have long-term assets, long-term liabilities. The only thing here is, though, that they only have current liabilities, which is a good sign. With total net assets, since this is in thousands, $2,951,000 in net assets, with 2.2 million of that being unrestricted. Here is the statement of revenues, expenses, and changes in fund balance. And keep in mind, again, we're using the word expenses here because the proprietary funds use the regular accrual basis of accounting. And you'll see here, just like the government-wide statements do, so you've got depreciation, you've got operating revenues there, you've got your total change in net assets down here with your beginning net assets and your ending net assets. So a good year for the Emergency Management Communication District. Proprietary funds, of course, require a statement of cash flows, which are presented on using the direct method. The indirect method is the one that starts out up here with your net income or your changes in net assets and reconciles it all based on changes in the various operating assets like accounts receivable and all that kind of stuff. But this is the direct method as required, and then you have your adjustments that are required disclosures down here and your reconciliation of operating loss to net cash used. All right, now I wanted to show you this because the city of Birmingham, since it only had one proprietary fund, I wanted to show you this one from Dr. Mary M. That taught this class previously. She did the city of Las Vegas for hers. And I wanted you to just see a proprietary fund statement of net assets that had the multiple columns here, because all three of these are major. So you have a total summing up these major enterprise funds. And you'll notice too, as we covered in a previous chapter, internal service funds, since they are serving other departments within the government, they are not included in this as a business type activity for the fund financial statement. They are considered a governmental activity. But the city of Las Vegas has it presented separately out to the right here, to the right of the total column, which it should be. I thought this was interesting, an example of a pension fund, the statement of fiduciary net assets. This statement of fiduciary net assets, you can see, has the total investments, cash, total assets, and reports total net assets. Down here. It does use an accrual basis of accounting, but does not include liabilities here, which I'll talk more about that when we cover the financial, the footnotes section. See here, there's this statement of changes in fiduciary net assets, and again, they don't call it revenues and expenses on this sheet. They call it additions and deductions. And these deductions are payments of benefits, refunds of contributions, etc., investment expenses. The contributions are, the additions are both contributions as well as investment income that help increase the balance of the pension fund. Okay, next we have the footnotes, and the footnotes here start out with a discussion of the basic items, basic accounting policies. Again, kind of restate some of the things that were included in the transmittal letter earlier that give you when the city was founded, what form of government it uses with the mayor and the 9-member board. Okay, in other places in the notes, the main function of the notes is one of the main functions of the notes is going to provide you some detail about what makes up various numbers on the financial statements themselves. So you've got the deposits and investments. It's giving you the deposits number up here of 113 million and 129 million as of June 30th, 2012. And then it gives you the fair value of their investments that are on hand, the government treasuries, corporate debt, corporate stock, and the fair value of those various investments. Another interesting footnote, or one that's common, is going to give you the detailed information behind what makes up those capital asset numbers. Going to give you, like, here are the capital assets, the non-depreciable assets, which are land and any construction in progress. And then down here, the depreciable assets and less the accumulated depreciation is going to give you your net depreciable capital assets, and those combined, the non-depreciable and the net and the depreciable, are going to give you your governmental activities, should tie to that governmental activities statement of net assets totals for capital assets. I just thought this was interesting. Some of the other things you'll find, there's a commitments and contingencies section. So the city of Birmingham obviously has a ongoing obligation to make a contribution of $1.5 million each year for a period of 10 years, starting in June 2010 and thereafter. The contribution of $500,000 a year for a period of 15 years. So looks like a 25-year commitment to the Birmingham Zoo. To kind of keep that asset to the community going and making sure it can cover its operating costs. Here's something else interesting that's found in this CAFR as well as others, and it's a detail of the pension system, the various pension funds that it has. And you'll notice, if you'll remember back to the slide before, there weren't any long-term liabilities listed in the pension fund financial statements. Not only that, but take a look at this. Back in an earlier chapter, I was telling you pensions are really big in the news these days, and the reason is because so many of them are so badly underfunded. Alabama's underfunded, but not near like states like California or Illinois. In Illinois, most states have made some improvement over the past year or so, but Illinois is just getting deeper and deeper in the hole. And I want you to look at these funded ratios down at the bottom here. You've got 90 starting in about 2003. The funding ratio, which is when you take the actuarial valuation of the assets versus the actuarial value of the liabilities. Your difference is a negative number is good, a positive number is bad in this column because it means you're unfunded. And this ratio gives you how much of the city's future promises can be paid, assuming that their investments earn a certain return. What makes these numbers even worse than they look here, though, is found up here. Cities and municipalities across the country have been allowed to use pretty unreasonable investment returns, especially if you're talking about being conservative and the accounting principle of conservatism. They've been allowed to assume a 7% discount rate on their liabilities. So these numbers are probably worse than they actually are, because if the market doesn't produce 7% returns over the life of these pension obligations, then they're going to stay underfunded and something's going to have to give. The last section of the CAFR is the statistical section. And this first page of the statistical section just gives you various trends, various reports that you're going to see after this that show operating information, debt capacity, the revenue capacity, the financial trends. Financial Trends says these schedules present information on how the city's financial performance has changed over the past 7 fiscal years. And here's an example of this. And hopefully, I didn't find one for City of Birmingham, but hopefully most governments would make these type of things available to you in Excel format so that you could easily download them and do your own type of analysis. But as you can see here, it's showing you the trend for various activities over the last 7 years, and this is net assets by component. So you can see the increases and decreases for those various components there. Same thing on the next sheet. It's showing you expenses. This, I guess, went over to another sheet as well, but it's showing you the trends on all the expense categories. All right, so that does it for the CAFR for Birmingham. This, again, I told you at the beginning, we're going to cover how governments that don't use the dual track of accounting all year, which in practice is quite apparently a majority of them. They only make these entries to convert something to government-wide financial statements at the end of the year. And they do that by doing these required reconciliations. So you can look at this as like one big checklist. They convert capital acquisitions from expenditures to capital assets. That would be one adjusting entry that you would make to turn your governmental fund financial statements into government-wide financial statements. Recording the sales of capital assets, not all as revenue, but of course you'd recognize gains and losses on the net, by subtracting out the book value of the asset from the proceeds of the sale. You have to record depreciation on the government-wide statements. You have to convert issuance of debt from an operating statement account to a liability. So taking it off the income statement and putting it on the balance sheet because it's not a other financing sources anymore. It's a long-term liability for government-wide statements. Have to convert the payment of debt from the income statement to a liability because for government-wide financial statements, you're reducing the liability. It's not a other financing uses, or it's not an income statement expenditure type item. Have to incorporate the internal service fund activity, and you have to eliminate interfund receivables and payables among governmental funds, such as special revenue funds and general fund. Between governmental funds and internal service funds, because on the government-wide side, those internal service funds are seen as governmental activities. And any remaining balance represents activity between the governmental funds and enterprise funds and is transferred to an account called internal balances. And that internal balance, may have a debit or a credit balance. Last thing is that you have to eliminate interfund transfers and interfund transfers out occurring among governmental funds and between governmental funds and internal service funds. These must be eliminated. And then, again, any remaining balance represents transfers between governmental and business type activities.